Hey everyone, and welcome back to the channel. Today, we're diving into a company that's been on everyone's mind, and frankly, a bit of a roller coaster, Alibaba. We're asking the big question, is Alibaba stock a hidden gem, a value trap, or is it poised for a major comeback powered by artificial intelligence? Let's break it down. On-screen text, Alibaba, value trap or AI comeback? Visual. Show a graph of Alibaba's stock price peaking and then declining sharply. The regulatory shadow. Why Alibaba fell first off. Why did Alibaba, once a tech titan, see its value plummet by almost $700 billion? The short answer. Government regulation. Visual. Image of Jack Ma, and then the Ant Group IPO logo being crossed out. It all kicked off around October 2020, after Jack Ma, Alibaba's co-founder, made some critical remarks about Chinese lenders. This didn't sit well with the government, and things escalated fast. The Ant Group IPO, a massive deal, was suddenly halted. Visual. Images of government buildings and official seals, maybe a graphic representing fines. Then came hefty fines for anti-competitive practices, like forcing merchants to choose exclusively between Alibaba's platforms. The government essentially said, "We're watching and we're in charge." This period was tough, wiping out fortunes and signaling a major shift in how tech giants operate in China. On-screen text, from crackdown to new normal, but here's where it gets interesting. The government isn't just cracking down, they're reorienting. Think of it as moving from a laissez-faire approach to a new normal, where tech companies need to align with national priorities. Visual. Split screen. One side showing U.S. tech sanctions graphics, the other showing Chinese tech development graphics. Especially with U.S.-China tensions rising, China sees its tech companies, like Alibaba, as national assets, crucial in what's being called an AI war. It's less about punishment now, and more about strategic alignment and national security. On-screen text, new risks. Data security, however, new regulations on data security mean companies face ongoing compliance burdens, adding a layer of complexity for investors. Visual. A timeline graphic showing key regulatory events and corresponding stock price drops. Investor sentiment. Divided opinions. So, how are investors feeling? It's a mixed bag. Visual. Chart showing mixed analyst ratings, some buy, some hold. While some analysts are getting bullish on Alibaba, citing the passing of the worst regulatory storms and the promise of AI, others remain cautious. Some think it might be fairly valued due to persistent risks. Visual. Images representing a value trap and a deep value opportunity. Maybe a broken piggy bank versus a treasure chest. This brings us to the core debate. Is Alibaba a value trap, where something looks cheap but has underlying problems, or a deep value opportunity, waiting to be unlocked? Many retail investors see the potential, but are wary of the political risks. Alibaba's AI bet, the future is now. Let's talk about the biggest driver of this potential comeback. Artificial intelligence. Visual. A graphic showing a massive investment amount, $53.4 billion, in AI. Alibaba is going all in, committing a staggering $53.4 billion over 3 years to AI and cloud infrastructure. This isn't a small experiment, it's a fundamental shift. On-screen text. Qwen, Alibaba's AI engine. Visual. An animation of the Qwen AI model processing data, perhaps showing different languages and domains. At the heart of this is their AI model, Tongyi or Qwen. It's trained on vast amounts of data and uses an efficient architecture that allows for powerful performance with potentially lower costs. Visual. A comparison chart showing Qwen's performance against models like GPT-4o, with some wins and some areas for improvement. Alibaba claims Quinn is highly competitive, even outperforming global models in some benchmarks. While third-party analyses show it's strong, especially in safety and long-form understanding, it might lag slightly in more complex tasks like advanced math and coding compared to Western counterparts. Visual, a graphic showing Quinn's open weight model being downloaded by many developers. Even though it's not fully open source, their open weight strategy has fostered a huge developer community, leading to millions of downloads and hundreds of derivative models. On-screen text, AI integrated across the ecosystem, visual, icons representing Alibaba's various businesses, cloud, e-commerce, logistics, fintech. But Alibaba isn't just building a standalone AI product. They're integrating AI across their entire empire. Think AI-powered recommendations on Taobao boosting sales, chatbots handling customer service, and robotic arms in warehouses improving efficiency. Visual, a statistic showing triple-digit growth in AI-related cloud revenue. Their cloud intelligence group is now a major growth engine, with AI-related revenue from external clients growing at triple-digit rates for 8 straight quarters. Monetizing AI, the price war challenge. So, if AI is driving growth, why the concern about profitability? The Chinese market is in an intense price war for AI services. Visual, a graphic showing steep price cuts on API fees. Alibaba has slashed prices, prioritizing user acquisition over immediate profits. This, combined with a cultural preference for free services, makes generating profits from AI a real challenge, unlike Western subscription models. On-screen text, the land grab strategy. Visual, an illustration of Alibaba Cloud acting as a gateway to other profitable services. But this aggressive pricing could be a long-term play. By offering cheap AI, they're luring businesses onto their cloud platform. Once there, these businesses will need more of Alibaba's higher-margin services, like compute and storage. AI becomes the gateway to a much larger ecosystem. The big question, value trap or steal? Let's bring it all together. Is Alibaba a value trap or a steal? Visual, a comparison table showing Alibaba's valuation multiples, PE, PS, compared to industry averages and peers, highlighting Alibaba's low numbers. On paper, Alibaba looks incredibly cheap. Its valuation multiples are significantly lower than its peers and historical averages. This suggests a deep value opportunity. On-screen text, bull case, deep value opportunity. Visual, images representing strong fundamentals, cash reserves, and growth catalysts. The bull case is that the market is overreacting to non-fundamental risks. Alibaba is a solid, cash-rich company with AI and cloud as strong growth drivers. Even their move to develop AI chips shields them from U.S. export controls and aligns them with national priorities. For patient investors, this could be a huge opportunity with a significant margin of safety. On-screen text, bear case, value trap risk. Visual, images representing regulatory uncertainty, geopolitical tensions, and intense competition. The bear case argues that these low valuations are justified due to persistent China risk. Unpredictable regulations and geopolitical tensions could quickly change the game. Plus, they face fierce competition in e-commerce and the ongoing AI price war, which could continue to squeeze profits. The verdict, a calculated risk. So where does that leave us? Alibaba isn't a traditional value trap. It's not a failing business. It's a fundamentally sound company undergoing a massive transformation in a complex environment. Visual, split screen, one side with a stop sign representing risk, the other with an upward trending arrow representing AI comeback. The regulatory landscape has shifted, and Alibaba is now seen as a national asset in the global AI race. Their AI bet is real, with a capable model and a smart integration strategy. Ultimately, whether Alibaba is a value trap or AI comeback comes down to your risk tolerance. For patient investors who can handle the geopolitical and regulatory uncertainties, the AI-driven transformation presents a compelling deep value opportunity. Visual, a final graphic with the question, value trap or AI comeback? And options. Calculated risk, wait and see. If you're more growth-oriented or risk-averse, wait and see approach might be best until there's clearer evidence of AI profitability and a more stable geopolitical climate. Thanks for watching. Let us know your thoughts on Alibaba in the comments below. Don't forget to like and subscribe for more deep dives into the financial world. See you next time.